Have you ever been denied a loan and left scratching your head, wondering why? It could be because of your credit score. But with all the different credit bureaus and scoring models out there, it's enough to make anyone dizzy. Today, we're tackling Transunion specifically. You might have seen your Transunion score mentioned alongside your credit report, but what exactly does it mean, and more importantly, what's considered a good Transunion score? Let's unpack this credit score mystery and empower you to understand your financial standing a little better. First things first, let's talk about credit bureaus. Think of them as the big three record keepers of your credit history: Transunion, Experian, and Equifax. Each bureau collects information from lenders and creditors you've done business with, creating a report that details your creditworthiness. So, why Transunion specifically? While all three bureaus offer similar reports, lenders might use one or a combination of them when making credit decisions. Transunion often factors into mortgage applications, auto loans, and even certain types of insurance. Alright, now that we've established the importance of Transunion, let's dive into that all-important question: what's considered a good Transunion score? Transunion uses a FICO score, which stands for Fair Isaac Corporation. This is a widely used credit scoring model that assigns a numerical value between 300 and 850. The higher the score, the better your credit health appears to lenders. Here's a breakdown of what each Transunion FICO score range generally translates to. 300 to 579. This is considered a poor credit score. Lenders might see you as a high-risk borrower and be less likely to approve you for credit, or if they do, you'll likely face high interest rates. 580 to 669. This falls under the fair credit score range. You might still qualify for some loans, but interest rates might be higher than someone with a good or excellent score. 670 to 739. Now we're entering good credit territory. Lenders start to see you as a more reliable borrower, offering you better interest rates and loan options. 740 to 799. This is considered a very good credit score. You'll qualify for the most favorable loan terms and interest rates. 800 to 850. Congratulations. This is an excellent credit score. You'll have access to the best possible credit products and terms. It's important to remember that these are general ranges, and lenders might have their own specific score requirements. For example, a mortgage lender might require a minimum Transunion score of 740 for the best rates. But your Transunion score isn't the only factor lenders consider. Your credit report also details your credit history, including your payment history, credit utilization ratio, how much credit you're using compared to your limit, and the types of credit you have: credit cards, loans, etc. So, how can you improve your Transunion score? Here are some key strategies. Make sure your credit report is accurate. Review your report regularly and dispute any errors you find. Transunion offers a free credit report every year. You can access it at https://www.annualcreditreport.com/index.action. Pay your bills on time. Payment history is one of the biggest factors impacting your score. Aim for consistent, on-time payments for all your credit obligations. Keep your credit card balances low. Ideally, you should aim to utilize less than 30% of your credit limit. This shows lenders you're responsible and not overextending yourself. Build a healthy mix of credit. Having a mix of credit cards, installment loans, like car loans, and mortgages can positively impact your score. Improving your credit score takes time and commitment, but it's absolutely achievable. By following these tips and monitoring your Transunion score, you can unlock a world of better financial opportunities. Remember, knowledge is power, especially when it comes to your credit health. Don't be afraid to ask questions and seek professional advice if needed. With that said, thanks for watching, and until next time.